see what happens. Good morning, everyone. Let's get this show started. Good morning, everybody. Welcome to DYOR Live on the DYOR Media Network. It is June 12th, and like I say all the time, I can't believe the year's going by this quickly, and I can't believe the years are going by this quickly and have an account and figure out that I have to say it's 2023 and not the 1980s, not the 1990s, 2000s, 2010s, but it's the 2020s, and it's well into that, and we're well into a new world of finance with crypto and digital assets. And I want to thank everyone for tuning in. We have got a great show for you. As everybody knows, for the past couple of weeks here, months, I've been on the air here. We'll use the nice term complaining about the U.S. government's role in, I shouldn't say their role, their methods of choice for regulation. And if to set the stage for today's guest, a couple of months ago, we saw Custodia Bank, the CEO of Custodia Bank. Custodia Bank was applying for full membership in the Fed, and this lady by the name of Caitlin Long is their CEO, and she was denied coverage or denied membership in the Fed. And in one day, we heard the President of the United States, we heard the House or the Senate Financial Subcommittee, one of them, and we heard a couple other different places in the U.S. government, all at once, in a single day, kind of within a few hours, all parrot the same thing, that these crypto banks are scams and that they should have no role in the financial system. And when I heard that, I was like, wait a minute. How can all of these aren't, including the president? The president doesn't say anything without it going through 59 policy reviews. What is going on here? And sure enough, that started what many of your people are referring to as Operation Choke Point, and where we are potentially at Operation Choke Point number 2, in dealing with crypto, and we're seeing the long strategy being played out by the government and probably the lobbyists of the large banking industry, squeezing the old cojones of the industry here. And so I said I need to do a bunch of shows on it, get some people to talk about that. And so today we have a great guest. His name is Patrick Daugherty. I should say it, Patrick Daugherty. And we have some Irish jokes between us. But he is a former SEC lawyer and has a different take on how the markets should be regulated, or what the idea is that the government has many options to do what they need to do. What else could they be doing? And also, as usual, we'll have Cinco de Pedro. We got going a few minutes here, so everyone, we're running a little bit behind schedule here. But I'd like to bring in Pedro Garcia, the crypto analyst. Pedro, welcome to the show here. I hope I don't crash the whole thing by changing it out here. Let me see if I can bring up your chart. Awesome. There we are. Good morning, Pedro. Pedro's on the double East Coast. I mean the double West Coast, otherwise known as Seattle. And I goofed him up on the time zone. So he's been up all morning here.
Good times. I love it.
Pedro, I think you did turn your mic down a little bit.
Let me go ahead. Is that better? Is that better now?
That's a lot better. I like to have Pedro on a lot for the talk and the general theory about things. But this morning we want to hear what's coming up with the week. What are the big numbers? What's Bitcoin going to do? And thus, what's the rest of the market going to do? What's up, Pedro?
Hey, how you guys doing? Cinco de Pedro. Hola, ¿qué tal? Hope everybody's doing well today. So we've got a pretty interesting week.
Move your mic closer to your mouth, Pedro.
Oh, sorry. Is that better now? Can you guys hear me? All right, so we've got a really interesting week coming up. So this is right now we're in a stage that they call rollover, where in finance you have a thing called futures, and they have expiration dates like options. And one of the things that we want to be paying attention to is, in particular, Goldman rollover. When Goldman Sachs and major large institutions roll over from their current position to the new position that they have to establish in a new chart. And so because the CME does have Bitcoin futures, we are in a type of rollover that's currently happening. Now, I know traditional crypto charts, we have futures, there are futures there, and those are continuous and they trade off them, where they don't have to worry about a rollover. But traditional banking still uses contracts. So that's kind of like they're going to keep the market in kind of a range at this time until the new chart comes out. So I say that because there is some caveats in the market. So this is the weekly chart here of Bitcoin. And you can see right here that we have the 20-period moving average and the 200-period moving average. These are going to act as resistant levels. And as we move, as we do continue up into the week, if we do, we're going to see resistance come in. Now, I do have my support area here, which is basically my 50-period monthly moving average. As you guys can see here, that's it sitting right here, and it moved up just a tad. Let's go ahead. So
it's all lines. It's all lines.
All lines. But here's the thing, and I bring this up and make it real simple, okay? Yep. Right now, like I said, we're going to start a ping pong effect last week, and we're going to continue into that this week as Goldman Sachs keeps rolling over certain aspects of Bitcoin. So that's in a nutshell. And I want to just keep it very simple here. Numbers that we guys want to be paying attention to is the 26,519-ish area right here, which is basically the 200 weekly moving average, and the 20, which is the 26,296-ish area. Ish because we all know that we all trade on different charts. Everything is not uniform per se. The other number we want to be paying attention to is the monthly 50-period moving average.
Yep.
And the end of that area, which is sitting as a zone from the daily zone. And you saw a big push up from last week when we came in, we hit it and we pushed back up. So you can see here that be paying attention to the 25,389 area to the 25,331. That's in a nutshell, guys. Be ready for some type of ping pong. And then last but not least, our daily 8. You can see here that the daily 8 is trending down, and so we could see another ping pong off of these levels here. So it's something just to be paying attention.
So it's not, at this point, it's not bullish nor bearish. It's just, we're just going to go through the zones and let the market makers manipulate us to death for the next day or two.
Pretty much. And then after that, pretty much what we should see is, I think, a fall down to the next level, which is going to be that 24,000 area. I do think that we're going to come down. It's setting up a position to drop into the next week, into the next contract push. So that's my professional opinion. Again, this is for educational purposes. And this
Pedro is not telling you to buy anything here. He is not a FINRA registered broker. He is just teaching you how to read charts here.
Exactly. Just look at a chart. You can use that reading of charts real simple. You can look at eggs. You can look at milk. So it's the kind of it's a global viewing of whatever you want to see. Again, educational and social, educational, entertainment purposes. All right, that's in a nutshell.
All right, Pedro, thanks for that. Stick around for later if you want to for questions and answers and stuff like that, if we get some good ones. Once again, ladies and gentlemen, that's Pedro Garcia, the crypto analyst. He has a YouTube channel in which he talks about this stuff. Crypto chart analysis, right. And he will, I'll drop the link to that in the comments. So if you're watching this on the replay, go ahead and check him out. One of the things that I do want to talk about is what we try to, like I said, we try to keep things at a high level on DYOR Live, and there are lots of channels to go and get detailed technical analysis from, including Pedro's. But if you have questions about it and about anything that Pedro said, drop them in the comments here. I'll make sure Pedro answers them, or I'll try. Good luck with that. and we'll get you some good feedback, because the idea here is that we use this channel, like I say, to educate. I use it to educate me, and I use it to educate my viewers too. And so if you drop some comments and questions, even though we might not get them in the live section, we'll get them in the comments and get you the right answers. And with that, I had got to do the old thing where I make a little money here. But we're going to hear from my sponsor here, Audit Chain, for a minute or so, and then we'll be back with our guest.
Most of you know that crypto exchanges have been taking a beating about transparency, and many groups out there are trying to solve that. But Audit Chain has already done that. Audit Chain's protocols and network of validators can mathematically prove that a company's entire financial state, not just proof of reserves, but a proof of state, and whether or not that company is providing accurate reporting and information to the respective government regulators and to the public. Seriously, you and I can check crypto companies and traditional companies' financial reports for transparency and accuracy using a logic and reasoning engine called Patchouli that records its output where? On the blockchain. Seriously, ladies and gentlemen, blockchain technology is now able to be used to check on traditional companies. Behind me is a list of companies that comprise the S&P 500, S&P 100. In essence, the largest U.S. companies by size. More than one quarter, 29 out of 100, have problems with their reports. Remember, accounting and other corporate systems are garbage in and garbage out. So if there are problems with the data out for these companies, in red here, what does that mean? That's right, ladies and gentlemen. There are problems with the data going in. And this was figured out not by accounting or auditing firms and fleets of consultants. This was compiled and reported on by Audit Chain's Patchouli validating nodes and took only 5 minutes. It's revolutionary and it's a disruptor technology. Audit Chain.
That's right, ladies and gentlemen, Audit Chain. And for you guests behind the scenes here, you didn't hear that. Just saw it, but I highly suggest everyone go check out Audit Chain. You can find them at auditchain.finance. And you can also see me hosting their show, On the Brink, a podcast with Jason Myers, the lead architect for Audit Chain. And we do that periodically. He's on his way back from London, and we'll have more info about that coming up. But more to the point here today, we have our guest on the show today. And it's important because we like to get different views for things. And the media right now is filled with two things, is filled with what the government is trying to put out, the SEC's viewpoint of things, and people that are just so hating on the SEC. If you, I mean, some of the funniest Twitter threads are anything that the SEC or Gary Gensler tweets, and then the responses to it are, frankly, they're the memes that are instantly come up with are really funny, and that tells us that the market and the people that make up the market are unhappy with what is going on. And as much as this sinkhole of the world comes through Twitter, it is a harbinger of how people feel and the sentiment of things, and people are not happy with the SEC. So we want to get some alternative viewpoints about that. And one of the ways you do that is you find experts in the field that disagree with what's going on. And thankfully, LinkedIn has come around, and I trolled LinkedIn far and wide to find experts, and I ultimately find someone that lives down the street from me. And we're going to bring our guest on the show. I'd like to introduce, let's see if I can get this right, Patrick Daugherty. If my wrong screen. That one. This is my guest, Patrick Daugherty, former SEC attorney back in the Reagan era, which is a while ago, but the SEC doesn't change that much. I just realized that I'm dark here, but the SEC doesn't change that much, but it did a little bit during his time, and he's going to have some insight on that. And he is also a partner at a law firm here at Foley, and I'm not going to get the second name right there. Patrick.
Lardner.
Lardner, that's it. Foley and Lardner. And he runs their blockchain and Web3 practices. I'm not an attorney, so I don't say that correctly. But he's, as they say, he's sought out in the industry for his advice. And he also teaches courses at Cornell University in Ithaca, New York, which is not only a good thing in educating the next generation, but it means he's good at communicating his thoughts. And hopefully we'll be able to get those thoughts about that today. So, Patrick, welcome to the show.
Thanks very much for having me on. It's
appreciate it. I appreciate it a lot. Like I said, I found you just down the street from me. We probably could have done it in studio here just as easy.
Yeah, we've got to get out and play some golf when the later
true.
in the summer, perhaps. But there is a fair amount of crypto talent, digital asset talent in Chicago.
I agree.
I mean, we've got the largest exchange in the world here, a couple of them, and that's not only the source of business, but it's spun off a lot of talent in the prop trading firms and the hedge funds.
Are they actually here anymore, though? I mean, it's the trading floors have disappeared. The office, the people are slowly moving to Miami. It seems like. It just seems like they're abandoning Chicago as fast as they can.
You're right about that. It's a sad story. I think that's less about crypto than it is about the
socioeconomic issues going on
in Illinois. Yeah.
That's about 20 other shows that we could do about that.
Yeah, I think so. But we have lost a lot of. We lost Ken Griffin. That's a huge loss.
That was a big one. What's that, Citadel?
Guggenheim has announced that they're leaving.
Yep.
And those are big ones. But there are a lot of entrepreneurs who've also left, and yet there are others who are still here and coming on strong. CoinFlip, for example, has got space in the old post office, and
right, that's a
gorgeous. They're growing.
That's
a robust player. That was founded in a Northwestern University dorm room, actually. So
I love it. I love those stories.
Yeah.
Well, what led me to having you on the show was a comment that you posted, and unfortunately my computer is wonky this morning. I was going to bring it up on the screen to read it, but you made a comment about. That was published on, I don't know if it was on CoinDesk or whatever. I'm trying to bring it up. In fact, I'll bring it up in the background here and just read it. Might even be on the screen behind me. This is your quote. That it says, again, the SEC claims that particular digital assets are illegally offered securities without suing their issuers or even identifying their issuers, said Patrick Daugherty, a lawyer who once worked with the SEC but now represents crypto companies and exchanges at Foley and Lardner in Chicago. An SEC allegation is not a judicial judgment. It is not a binding legal determination, but neither can it be ignored. The SEC knows this. By asserting that these assets are securities, the SEC is attempting to chill the market for them without having proved its case in court. And I read that, and while seemingly an innocuous statement, just giving people an understanding of what a SEC determination is, it made me angry. And as I've said to you in the lead up to the show, it made me angry because if they went about their way determining that they want to chill the markets, that means they knew they had alternatives. And they knew they had alternatives that would produce different results that wouldn't harm the market. And it's obviously my opinion on this, but it's my opinion that they intentionally chose to harm the market and may or may not have realized the downstream effects of calling Solana, Cardano, and everybody else a security, because they probably don't understand the size of the ecosystems. These companies that you mentioned here in Chicago or elsewhere, a lot of them build their products on these blockchains. And then when the government comes out and says, that underlying highway and token that you have built your entire company on with those hundreds of millions of dollars in BC is suddenly in legal limbo, that whole ecosystem suffers. And that's jobs, that's VC money, jobs, that's mortgage payments, that's car payments, that's kids' tuition. That's a lot of money in the economy. And Gary Gensler essentially had a choice, and what he chose to do was to smash the crypto economy and say, hey, we're putting the hammer down when they had alternatives. What can you expand upon your quote and what my opinion was? Does that make sense, or am I out of line there?
I think you're right, and you're right to feel angry about it. Not only did they try to chill the market, they succeeded. If
Yes.
you look at the last 7 days of altcoin trading, basically everything's off that isn't named Bitcoin or Ether.
Right, and the
I
liquidity
mean,
is
some of
very
them down,
thin.
30% or more, particularly the ones that they named in their complaints. Now, I can't talk about Coinbase, but I can talk about Binance. And, they sued Binance last Monday. They followed up with a lawsuit against Coinbase on Tuesday. And in those complaints, they named a dozen, 20 different tokens that are, in their view,
Right.
securities, and therefore traded illegally by platforms in the United States, where they are traded in the United States. And they immediately sold off.
Yeah, they did.
By the way, and they knew this was going to happen because they did this to Ripple, and they got the same result there. Now, you and I regard this as a bug, or even worse. Some of them might regard it as a feature, because they don't like crypto, and
Right.
they want it to go away. And so damaging crypto from their point of view is a benefit, not a detriment. It's not, however, how the SEC has traditionally behaved. It's not how a responsible government agency would behave. Normally, you make the rules first and enforce them later.
Right. Well, I guess
But this is all enforcement. Yeah.
During Gensler and crew saw this new thing coming. In fact, his predecessors saw it coming. I mean, Bitcoin has been around for a long
Right.
time, and Ether has as well. And Mr. Gensler is new to the SEC, relatively new to it. And it, the old trying to jam a square peg in a round hole thing is going on here. And it does, the SEC, like I said, I'm no lawyer and I've been learning a lot in the past few months, but the SEC does have roots. They have specific things in the law that allow them to make exemptions for things, and to say we're not ready to regulate this. We will. I think you linked to one at one point, the general exemptive authority of the SEC. And they have the ability to take some time and figure this out. They have the ability to make new categories. They have the ability to do things new, not just cram everything into an old way. And that, in your experience with the SEC and working there and being the counsel to the commissioner, did you see new products come in that were head scratchers and were like, they don't fit in everything we're doing? Let's come up with a new asset class or a new way to register things?
Well, sure. That's been the course of capital markets history from the very beginning of regulated finance, from the 1930s onward. You're right, it was there during the Reagan administration and the early Bush years. That was the last truly deregulatory period in the financial sector, in my view. And frankly, that's why I was there. That's why I went there. I went there as a deregulator, not a regulator. I think I was the first SEC employee to belong to the Federalist Society. I have been a committed libertarian all my life. And what we did in that environment was, I'll give you an example. The rules for offshore offerings were very confusing. So what did we do? We made a new clean rule called Regulation S that has been used with very little trouble since then to conduct offshore offerings. We could have just sued people that we thought were not following the vague and impossible to understand rules, but instead we clarified the rules and people followed them, and the market has behaved properly. There was another rule called 144A, which had to do with the real resales of privately placed securities. That was confusing too. So what we did was we created Rule 144A to sort of channel people into the right course. And that market has not been one where you've needed to have much enforcement. Did the same thing years later when I was gone with asset-backed securities.
Right.
This is, I think, the item that I referred to in my column. That's the right way of doing things now, and that's the traditional SEC way of doing things. The non-traditional thing is to say, well, we don't like what's going on here, so we're just going to sue X, and we're going to sue Y, and we're going to sue Z, and they'll stop doing it, and everyone will stop doing it. Well, that might stop some bad actors, but it also chills good behavior. It chills lawful behavior.
Right.
Because if you don't know what the rules are, you tend to be more cautious about it than if you do know what the rules are.
Well, that's certainly the truth. It's certainly true. The cooling effect has been. I think it was William H. Macy played the character the Cooler in that movie a while ago, where his mere presence killed the action at the tables. And I think Gensler's turning into that person.
And it drives people away. It doesn't just drive them from Chicago to Miami. It drives them offshore. So the business moves offshore where they don't have to play by the SEC rules, at least if they are careful in how they go about it. They don't have to play by the SEC's rules. They have to be careful. They can't do what Binance is alleged to have been done, which is, well, we'll just tell all our U.S. customers to lie about where they are, and we'll continue to serve them in the United States. That's what, I don't know that it's true, but that's what the government
seemingly what they're telling everybody.
If they did that, that's not really operating offshore, not at all. But if you do operate offshore and you screen out the U.S. properly, then it's a United States Securities and Exchange Commission. It's not the Global Securities and Exchange Commission.
Well, so, one would have to try and get that through the current SEC's head, that they're not the global police here. It's difficult.
A strong attitude that Father knows best, and it's a very much a command and control attitude, one of centralized control over your financial life and mine. And that's not accidental. I think that point of view is pervasive in the current administration. I think we could get into that or not, but all these appointees come from the same school of thought. And
I agree.
And Gensler.
I've been watching as we say, the mission creep of KYC and AML laws. Yeah. The mission creep in that is just, it blows my mind how fast it just encompasses every aspect of your life. And as I like to point out, the current government is really pushing that down to every last aspect of your life. But pretty soon you won't be able to go buy a beer anonymously. You'll be like, whoa, that might be terrorist financing,
Well,
we better watch out.
That's right. It's all about centralized control and control over your personal finances. Okay, let's look at it this way. Let's suppose your agenda is to obtain the personal control or obtain government control over the personal finances of Americans. How might you do that? Well, you might kill off crypto because that's largely decentralized and that's outside the government's control. And then you install a CBDC at the retail level, requiring every adult to bank with the Fed. Now you're in a position to control their financial lives, actually. And by the way, this has been tried elsewhere. China has done this.
Social credit scores too?
Yeah, yes. But if you believe in controlling the personal financial resources of your citizens, this is a way to do it.
Don't get me started on central bank digital coins.
First eliminate the competition, and then you install something extremely centralized like a CBDC,
right?
And you push people to do it. I believe the loss of control over my personal financial matters is the loss of liberty. I believe they're inextricably linked. The loss of economic liberty and the loss of political liberty and liberty.
I
of
agree with
thought.
that too, and that's one of the reasons why I disagreed with the recent Supreme Court case in which they eviscerated the old Roe v. Wade thing and the implications it has on privacy, because I believe your finances are part of your private life, and they're not a matter of the government to oversee every little aspect of it. And as they were building, like I said, I'm not a constitutional attorney, a constitutional law attorney, but I like to follow these things. And as they were building trying to enshrine that right to privacy of things, I was hoping that one day it would come to fruition to protect our finances, and took a couple back steps there, 2 steps, 10 steps back recently.
I'd like to add a couple thoughts before, because I don't want them to get lost.
Sure.
One is that in my criticism of the SEC, I don't mean to attack the professional staff. They just follow orders. I believe problem is, and by the way, I think they're smart and very serious, hardworking lawyers. It's the leadership that I object to. It's the orders that they're given from the top. I think those are wrong as a matter of policy, and I don't have a personal animus toward Gary Gensler, but I just think he has the wrong philosophy. That's my view. The other thing I'll add is that I'm just one person. I'm on the faculty at Cornell Law School, but I don't speak for them. And
correct.
I'm a partner in a major law firm, and I don't speak for it in these circumstances. These are just my views.
You get a lawyer on screen when they give you the details like that.
Well, that's it. And this is not financial advice. It's
exactly.
It's not legal advice. Do your own research, as someone once said.
Yeah, as I like to say every day. Just a quick comment here. LG comments, this conversation is very important and so relevant as the current thought process of the U.S. government. Yeah. It's the current thought process, and it's very possible it might be for the next 5 years as well.
Well, to that end, there is something going on in the House Financial Services Committee and Ag Committee that's very important and very useful and actionable, and it's a market structure bill. Hasn't been introduced yet. It's been put out there as a discussion draft. It's about 200 pages long. So I'm not going to get into it at length on your show, nor did you ask me to. But
we covered it a little bit the other day. Patrick McHenry's new bill.
There's a lot of good thinking in that bill. For example, it says, here's how the cash markets in crypto ought to be regulated. And it's a thoughtful way. It can actually happen without too much burden, in my view. And it also says, oh, by the way, about these lawsuits and these adverse actions, they will all be paused while the SEC and the CFTC actually do come up with regulations. The regulations Daugherty is saying that they should have come up with before they sued people. We're now going to pause the lawsuits, and we're going to tell the agencies to come up with regulations and then reconsider their lawsuits. This is not law yet, but it has the possibility of being law. I think there's broad support for it, and I hope it becomes law.
It did seem like the announcements for Binance and Coinbase the other day were timed to get the news out ahead of the CFTC chairman testifying in front of that committee. He testified in front of the House Ag Committee, and also the House Financial Services Committee was introducing and talking about their draft legislation. And it just seems like Gensler wanted to get the media punch there and get it going. And it just, in fact, during the House Agricultural Committee, one of the representatives asked Chairman Rostin Benham, do you guys announce things based on politics or media timescale or on media time? He goes, no, we just announce things as we get to things. We don't do things like the SEC. I paraphrased his comments there a little bit there. But his point was he was pointing a dig at the SEC for being a media-based organization, whereas he was saying our organization is here just to regulate the daily markets.
I'll tell you this. I've been around a lot of Jesuits, and they taught me not to believe in coincidences. I don't believe in coincidences.
Good. My son goes to a Jesuit school. Hopefully he learns that too.
Too many so-called coincidences where the SEC makes a release a day or two ahead of a congressional hearing.
Right.
And that's not a coincidence.
All right. While I got you here, I have a couple other things to think about in this scheme of crypto and the SEC trying to pigeonhole everybody back into the old way of doing things. Creating a new security and taking it public, whether it's a company or just an offering or something, is a hard process. It's not easy. You have attorneys involved. You have to have financial advisors involved. You have to have these people, that people, blah blah blah, to make sure you do things right, to make sure you're disclosing things properly. All those types of things need to go through. And with the SEC saying, well, pretty much all of crypto is a security, we're to the point now with crypto where a 12-year-old or a 13-year-old can start a security. Literally a 12-year-old now, and there was a video on YouTube about it, in which a 12-year-old launches a token, pairs liquidity with it, and it's available to trade on a DEX. And thus he can instantly move money, or she, whomever it was, can move money around the world. And the person it's not even really in any jurisdiction a legal person, except in some weird countries of the world. And they're not trading under any legal entity. They're not doing anything that the law can actually put its fingers on. How is it? It blows my mind to think that if a 12-year-old can do this, how can a big old school organization cram these rules into the old way of doing things? How could they possibly regulate a 12-year-old? It's a quagmire.
Well, they probably can't stop creators from creating, but it does create risk for those folks. I'll give you an example. There was a bill in the Illinois legislature this past spring, just a couple months ago, called Illinois DARA, Digital Asset Reform Act, I think, DARA. And it would have made it illegal for children in dorm rooms to create NFTs, for example. Now, at some point, the bill got amended, and then the bill died. I suspect it'll be back in the fall in some form. But
bills never die.
There is a point of view that crypto is bad. It's all bad. This all happened, after Sam Bankman-Fried went down. That's when the attitude started to change, of course. But here's what is lost by people who don't understand crypto. There are many thousands of tokens, and no two of them are identical. NFT is not sand, which is not AVAX,
right,
which is not the BUSD stablecoin, which is not Circle stablecoin, which is not Ether, which is not Bitcoin. They're different from one another. They don't have the same characteristics. The only thing they have in common is the use of blockchain technology and probably some degree of decentralization and some degree of utility.
Right.
But you can't regulate them all as if they were the same, because in fact, they're not. People will ask me, what do I think about crypto? And I'll say, I don't know. What do you think about consumer products? Kind of depends which consumer. People, well, I don't know. What do you think about pharmaceuticals?
Right. The same thing. Speaking of treating the NFTs as a consumer product, what I see many people getting in trouble for soon is not collecting sales tax on selling NFTs. The state of Illinois is going to be wanting their cut. If someone launches it from the dorm room, then you say, "Hey, you sold $10,000 worth of NFTs." Right. That's in the city of Chicago, that's $1,000 in sales tax you got to remit.
Well, it's a revenue source, right? And any industry, I don't remember Reagan's quote exactly, but something like, if it moves, tax it, or try to kill it. If you haven't killed it, regulate it. So it's any sign of life in the business world needs to be taxed because it's a revenue source for governments that spend first and figure out how to pay for it later.
Normally I'd be putting a lot of. I've been selectively putting comments on the screen and or tweets from people about it, but because my computer has been bulky this morning, I haven't really been doing that. So if there are any questions that listeners are doing, drop them in the comments for me. Pedro, if you're still back there and you have a question, just come on the air when you can.
And I'll say also, I tweet and I'm on LinkedIn, Patrick Daugherty, Chicago lawyer on LinkedIn. That'll get you to me. And I post a lot of content there too. So if anyone wants to engage, they can do that.
That's right. We wouldn't be good unless we were pitching the socials here. In fact, let's see if we can not blow up the computer here. And Patrick's recent tweet here: Operation Choke Point 2.0, continued by Patrick Daugherty. It didn't bring the picture up of you had.
Yeah.
Of
to your
Gensler.
point about the government getting all over crypto, Operation Choke Point by the banking agencies is a prime example of that. And there's a lot I can't say because I represent some of these people in lawsuits involving the government, but I think it's a coordinated action across the agencies. Like you said, on one day,
right.
Several banking agencies and the White House all said, crypto bad. That kind of thing doesn't happen accidentally. And it happened at the same time, give or take a week, that the SEC was proposing custody rules, making it, which if implemented would make it basically impossible for asset managers to custody crypto assets. Basically, they said, you need a bank to custody crypto assets. At the same time that the banking agencies were saying there will be no more banks custodying crypto assets. So put those two thoughts together. Number one, need a bank to custody crypto assets. Number two, there are no banks allowed to custody crypto assets. And you come up with, no solution there. Thank you, U.S. government.
Well, we have the state of New York saying Ether is a security. We have the CFT saying it's not a security. There's plenty of parts of the government.
And let me tell you, you mentioned, and Pedro mentioned early on that the CME does trade Bitcoin futures. It also trades Ether futures.
Yep.
Just imagine what would happen in terms of market disruption if the SEC claimed that Ether was a security. It would not only whack the cash market, but it would whack the futures market, which is a regulated futures market. And the CFTC very plainly has stated, and not just once, that Ether is not a security.
Yes.
Right.
Well,
that leads me. Sorry, Pedro. That leads me to my question that I have up on the screen.
Fighting, and so that'd be just horrible. And and we're talking about, I hope that doesn't happen. But 4 times in the House Financial Services Committee, Chair Gensler was asked whether Ether was a security, and 4 times he refused to give a straight answer.
Right. I think you said that, and then the screen right now it says, I have your tweet up saying a few questions about crypto asset regulation for SEC Chair Gensler, in which you famously asked a bunch of questions out there into the ether of the world to see if you'd get an answer. Patrick, did you get an answer from them?
No, because I asked my questions, as a professor would, and not as I can't swear the witness and, make him testify. However, many of those questions that I asked were in fact asked by other people that have the same ideas.
Right.
So, Patrick McHenry, who chairs financial services, he asked some of those questions, and, the chair of the digital asset subcommittee asked some of those questions. He evaded them. He
evaded the Ether question, that's for sure.
He evaded the questions, but I suspect he'll be back because they have the power of the gavel, and they can call hearings. In fact, there's a hearing tomorrow on the stablecoin bill and on the market structure bill. And my colleague Coy Garrison, a Washington lawyer, is going to be on the panel. Coy also helps us at the Global Digital Asset and Cryptocurrency Association, a very savvy young lawyer. He'll be on the panel testifying about these. So the Financial Services Committee continues to try to progress here. And I believe they will in the end.
Yeah, it's one of the few committees that changed from the last election to do something good. It's,
yeah.
They were a rough committee under the last chairmanship, as they say.
Well, that's right. And, we never have had a pro-crypto SEC chairman. Of course, there's only been two choices. The industry isn't that old. Without getting too political, there are politicians who favor crypto and those who don't, In the pro column, you've got Governor DeSantis, who says, number one, I'm pro-crypto, and number two, there will be no CBDCs in the state of Florida. So he gets it. I'm not suggesting anyone should be a single issue voter, but if this is on your mind, that's something you might want to look into.
No one single issue votes, especially here in Chicago either.
No. Single issue crypto voters are a very rare breed, I suspect. But
hey, sorry, Pedro, I cut you off earlier. If you want to ask your question, go ahead.
No, I was just going to ask you, in relationship to, and you're speaking.
You got to move your mic closer to your mouth again.
Oh, sorry about that. Can you hear me now? I keep turning down because I don't want you guys hearing me, so that's why I'm like, oh shoot, can you hear me now? Can you hear me? Hello?
You're good.
All right, so my question was this.
Now you did it again, Pedro. Get your mic close to your mouth.
Come on. It keeps popping up, that's why. All right, can you hear me now? Is that better?
Yep.
All right, so in relationship to what you were talking about regarding the senators, Republican, or not, but people who are basically the House representatives and the senators. Do you feel like as if there is almost like this back talk, like they were a little bit late to the party in relationship to this? So it's almost as if they're like, you know what, we do have the power to push this down. Why don't we double talk and we scare everybody out, and then we can get in at a lower level? It almost feels a little bit like that. But, I mean, I could be wrong.
Well, no, I think you're right. I think there is a CYA operation going on here, particularly at the SEC. So here's what we know.
Can you speak about CI, or you say CI or CYA?
No, CYA.
Yeah,
CYA.
cover your butt.
Oh, yeah.
Oh, gotcha.
Oh, look, you got to remember how embarrassing FTX had to be to Chair Gensler.
Oh,
he had two formal meetings with Sam. And those are the ones we know about. Who knows about all the informal contacts they had with staff? They were preparing a no action letter to give Sam, basically at FTX, the best relief available for anyone in the crypto industry. And then boom, and by the way, all during this time, they were doing nothing whatsoever about Voyager or Celsius. They were beating
places
up
that obviously needed to be regulated as they were lending billions of dollars.
One would think, and then it blows up. And now, see, I think the reason you got the Binance lawsuit and the other one I can't talk about is because they're embarrassed about what happened with FTX.
They're pissed. It's retribution. It's what it is. It's retribution.
Right. And by the way, they can't. There's nothing much they can do about FTX. That one's under control by the Justice Department for the most part, and so on. But they can beat up on other people who look somewhat like Sam.
Let me ask you a quick question.
Like I said, all of crypto bad, right? So, so they go after, they target others, and each of these exchanges operates in a different way. Let's be very clear about that. I know how they operate. I know well how they operate. They're not identical, not even close to being identical. And the perceived flaws in them are different, one from the other. And I'm not saying there's anything wrong with Coinbase, which I think is not, but there's not. But what Sam did, and he's entitled to his day in court, but he's alleged to basically have just stolen a lot of money.
He will never see his day in court.
and that's, you know,
CZ will see
and-
it before he does.
yeah, no, it's CZ, you know, so CZ is alleged to have basically directed all of this from outside the
Yep.
United States, and is alleged to have, you know, caused people to cause their own customers to lie about where they were, and also engage in market manipulation, which is not alleged against the third exchange at all. None of that. That's a very different kind of operation. So they're not identical, but they're both big, and you know, they let the horse get out of the barn on FTX, and so they're, I think, intent on making a statement with these other.
Yeah,
things.
by burning the rest of the barn to the ground.
Right.
Well, can I ask you a cool question? Because we know that SBF or Sam Bankman-Fried, always mess his name up. SBF, I call him.
SBF.
Yeah, he gave a lot of money to politicians.
Yes, he did.
On both sides of the track. So it wasn't like he was.
That's right.
You know, and his mother and his parents, they both have been always contributors to both sides. It almost feels as if they're protecting their own, right? And they need a cover story, right? Because these are their children, right? Like these are literally.
Well,
go ahead.
It's literally their children.
That's
Yeah.
right. I mean,
Or
FTX did give a lot of money to both sides of the aisle. Sam himself gave to Democratic politicians only. I don't know whether that's what caused Gary Gensler to latch onto him or not. I'm not saying it did, but you know, he didn't get into the chair by immaculate conception. He had sponsors in the Senate, and those sponsors were Elizabeth Warren and other progressives. So, but and by the way, the giving of that money is itself alleged to have been a crime because they did it in ways that violated campaign finance laws.
Yeah.
So
Shocking.
there are
Oh my goodness, I'm so
alleged
shocked.
crimes all over the place in the FTX story, in the Sam Bankman-Fried story, which are largely the same story because he had such tight control over it, just as CZ.
Shocking, I say. Shocking. Well, Patrick, we don't have a lot of time left in our show today, and in my haste to get things going, because of a few technical issues, I left off kind of the one important question that I always like to ask people, and that is, what was your first experience with crypto in which you learned about it and were like, hey, what is this all new thing, and how did you get involved in it?
I got involved in late 16 or 17 as ICOs were coming along. I'm scrambling to remember the very first project. I think it might have been the Merck's futures products that I helped. I mean, Merck has many very fine lawyers, but I helped a little. But what really got my attention was the great number of ICOs. And you may have noticed I got some gray hair. My CEO asked me to wrap my arms around this field because we were concerned that we might take on projects that were bad or illegal, and everyone would get in trouble. So I was the gray hair who was supposed to sort them out. 80% of them we declined to take on, but about 20% of them we did like. Ava Labs was one of the first. AVAX.
Yep.
I helped AVAX in its early days. Coincidentally, that was invented at Cornell, although that has nothing to do with me teaching there. It truly has nothing to do with it, but it was invented at Cornell across the street from the law school in the engineering department. That was probably my first project. And I just got into it because I love financial innovation, and I'm a libertarian.
Right.
So I guess I'm an OG in that way. And then over time began to advise prop traders, advise funds, advise other entrepreneurs developing new tokens and protocols, began to advise exchanges, miners, ATM operators on a global basis, to the point where now it's not everything I do, because I still do IPOs and takeovers, but it's the only thing I really focused on. It's the only place where I do academic research and publish and write a lot, because it is the future of finance. And
Well, I have another show in which I call Rugged, Ruined, and Wrecked, in which I use all the misfortunes of crypto in order to teach people what not to do in crypto. And I always ask people this question, is that, have you ever been rug pulled?
Oh, well, I've been rug pulled by the SEC because they said come in and register, and then they made it impossible to register. How's that?
Yeah.
Have I been rug pulled in crypto? No. And I will add that none of my clients has ever gotten into trouble on a project in which I've been involved. They've gotten in trouble based on other people's advice and then come to me for help. I've gotten a lot of that recently. But I give very cautious advice and have succeeded in keeping my clients out of trouble so far. Knock on wood for that, because the government's more aggressive all the time. But do your own research. These are not investment recommendations. I am a hodler, and I am net long in crypto assets. If I were an exceptional trader, I'd probably trade rather than practice law.
Hey, I'm willing to help. If you ever want to learn, I have a few people
Thanks.
I would recommend. I'm not joking.
I was counting down in my head till
family
Pedro
in the
saying,
industry, and some of my best friends and clients are outstanding crypto traders. But
yep, there are some good ones, and it seems to be one of those things. If you have some good experience, and if you have a nice nest egg behind you, otherwise known as like Citadel, you can make a lot of really good trades and move the market in your favor pretty easily. Patrick, I want to say we could talk all day, and there'll be many topics, and so I hope soon to have you back on my show someday. I want to thank you for taking the time out of your busy schedule to speak with us on these.
It's a great way to begin the work week, and if your viewers find value in this, I'd be happy to come back sometime. So thank you for having me.
I think they will, and like I said, we do these things in the morning so we can get the day started with. We don't get a big live audience, but we get a lot of replays, and I like to cut up a little snippets of the conversation and send them out in social media to drive people to the right information, as I like to say it, not the SEC's information or what the White House's press machine is wanting.
They do have
here.
Narrative, don't they?
Yeah,
yes.
they do. They do have quite the managed narrative, I have to say. And my little channel is not exactly cutting the weight for competing with that. But every little bit counts, and getting every little ear we can. And your advice today, and not necessarily your advice, but your experiences and what you're doing in the market is of a great value to our listeners. And I thank you for coming on the show. So, Patrick, thank you.
My pleasure. Thanks again.
All right, ladies and gentlemen, that was Patrick Daugherty with Foley and Lardner, a law firm here in Chicago, where I am today. And I thank him for coming on. We don't have any time left in the show today to get on with other things and questions and answers. Pedro Garcia, the crypto chart analyst, thank you for coming on. Let me get your one last plug up here for that. Thanks, I appreciate it. Have a great day, Pedro. We will see you again on a future episode of this. And ladies and gentlemen, there's a lot coming out. There's a hearing tomorrow that Patrick mentioned. I will probably cover that at some point, something like that. But anyway, that's all for the show today. As I always say, when I hit this ending credits button, it's probably going to blow up my computer. So everyone have a great day. It blew up my computer. Everyone have a great day. So see you tomorrow. Be there.